It's Wednesday, February 3rd, 2010, and it's about 7 o'clock in the morning, or a little bit after 7 o'clock in the morning, California time. I'm Rob Booker, and this is the FX Street Weekly Webinar. Good to be here. Sorry I missed you a couple times. I think I was here last week, but and Maurice is on this time. Wow. Sounds good. I'm going to bring up a chart here. Just want to make sure that everybody is able to see it. This is the US dollar, Canadian dollar 5-minute chart. And it has been away from the 800 simple moving average, it looks like, for 500 bars. Excellent. When it's been away for 500 bars, that's above average, longer than normal, and due for a trip back to the 800 simple moving average, especially if the currency pair has already gone above the 800 simple moving average once before. That makes it a little bit more likely that that's going to happen. However, in this instance right here that I'm looking at this morning, there's a couple problems. Number one is, where would we get in now that the currency pair is getting closer and closer to the 800? The 800 simple moving average is at 1.0622, and we're about 30 pips lower than that. So there's enough room in there for a 30-pip trade, especially if you went with a stop loss below the 62 exponential moving average so you have like a 20-point stop loss at the most and a 30-pip profit target. That's a little bit too close for me. However, it's doable and it's possible. And that would be a theoretical possibility for somebody that was interested in a trade like this that we do. Let's switch over to the euro dollar and cycle through some 1-minute charts. I think we've got a few opportunities here on the short-term charts this morning, but we're going to have to cycle through them in order to see them for sure. Takes a moment for them to load, and it takes a moment for us to really see how long it has been since we've been at the 800 simple moving average. And if you've got a currency pair that you're in a trade on and you want to take a look at and you're interested in looking closer at, we'd love to do that. I don't think some of these numbers that originally pop up at first are going to stick. Usually MetaTrader takes a moment to load. This one might be for real, but I'm not exactly sure. I don't think it is. I think even the dollar-yen fell all the way through the 800 simple moving average, which it did. And these are all 1-minute charts. And you can see that in the morning when I check the charts for the first time, traditionally, I just cycle through the charts one at a time. Yeah, the 30-minute chart on the dollar Canadian is almost ready, as Chris mentioned. But much of the other currency pairs, many of the other ones that we look at are sort of already back to where they ought to be or would normally be, or that we would expect them to be. Sometimes it just takes forever for these currency pairs to load. You ever notice that? I really want to take a look at this Australian dollar, US dollar as well. Which time frame first thing in the morning, says Harley? Well, first thing in the morning, traditionally I'll look at the 1-minute time frames to go for really short-term oscillator trades. In an instance like this, when there are no super short-term charts that are really set up and oscillating, in other words, then I'll move on to the 5-minute chart and then go from the 5-minute chart to the longer-term charts. And eventually, there'll be something that's setting up. And that way I kind of start with what might finish the fastest, meaning if I'm cycling through the charts and taking my time doing it, I might miss a trade on a 1-minute chart because I'm cycling through those longer term charts. However, if I'm cycling through and looking at the 5-minute chart or the 15-minute charts, the 1-minute chart first, I'll get those through and I'll set those trades up, and if I find anything, that'll be perfectly awesome. And I won't necessarily miss anything that's on the 1 hour chart or a longer time frame. Let's see if this is for real on the 15-minute chart on the US dollar Swiss franc. It looks like it is. Looks like the US dollar Swiss franc tried to get back to the 800, but now has been away from the 800 simple moving average for 1,068 bars. And that's pretty awesome. Definitely pretty cool here. That's a reasonably good setup. It's not a great entry on this right now because it just rocketed back upward. And the US dollar Canadian is almost setting up on the 30-minute chart. It's almost ready on the 30-minute chart. You can see the currency pair started to fall towards the 800 simple moving average, and the currency pair's been away from the 800 for 481 bars. So that's not quite long enough, but it's bordering on long enough. And it's getting close. So that's a good thing for those of us that watch the dollar Canadian. Two other currency pairs that I look at that are my favorites are the British pound Japanese yen and the pound Swiss. But I'm not sure that either of these currency pairs have set up. Yeah, both are just getting back to the 800 simple moving average. And the 30-minute chart on the pound Swiss is getting close to overextended, 475 bars, or, well, not anymore. Look at that. It fell back down, so the chart's loaded. It says it's been 667 bars, but you can see here that the currency pair fell, and MetaTrader is not detecting that the currency pair hit the 800 simple moving average. That would indicate to me that we've got to make another trip down. I mean, if it doesn't hit it, it doesn't hit it. For some of you out there on the 30-minute chart, the pound Swiss may have hit the 800 simple moving average. So it just depends on what version of MetaTrader you're using and what your charts look like exactly for you. All right, well, let's take a minute. Give me an idea of a currency pair that you want to look at. I've cycled through all the short-term charts that I would normally look at, and there's nothing quite setting up there. So what we should do is take a look, maybe get a suggestion on some currency pairs from people, and we'll take a look at those in order. And let me know if you suggest a currency pair. Let me know if you have a trade on that currency pair going right now. And if you do, if you're long or short, and if you're right now in a profitable trade or in an unprofitable trade and where you got in. And we'll take a look at currency pair. Be right back. Wow, this is good. We've got a lot of good suggestions here. Pete says he's short on cable. And Pete is break even on cable. That's an interesting quandary to be in. So I think we're going to start with Pete. And then we've got a bunch of other people mentioning trades that they are either in or considering. I'm just going to get my other mouse because I was using my little trackpad and it was bothering me. And Maurice is dollar Swiss, US dollar long in profit. That's pretty cool. Okay. So we're going to start with Pete, and Pete said he's short on cable. So pound dollar, we're going to start with probably the daily chart, but we may go even further than that. And I'm going to delete some lines that are on the chart here that we don't need anymore. And talk to you about a few things that we're looking at right here. Pete's definitely going with the trend on the daily chart, as you can see. I got a lot of really good suggestions and so forth from people. And we'll get to some of your other suggestions, but we're going to start with Pete. He's break even on a short cable trade. And Pete, if you're thinking about trends and stuff like that, you have certainly traded along with the daily charts trend, which has been predominantly down for quite some time. It had a big, huge shot upwards over the course of March and April of 2009. But by and large, you have stuck with what was the predominant trend, which is dollar strength over the course of the major economic crisis. We went sideways on the currency pair for, I'd say the last 6 months. We just went sideways. Really haven't broken outside of this range. But there seem to be signs, Pete, that this range is starting to break down, and there's really only two things that can happen now. I was looking at a trend line that you could see here in blue that tracked alongside the 200 simple moving average on the daily. And if that was broken, I sort of felt like we could see a resumption of the significant dollar trend that we'd seen for so long. Well, we broke that trend line and that 200 simple moving average, and then we just started ranging all over again. And what's happened is that the range has gotten smaller and smaller and smaller and smaller until the time has come where we are basically getting ready for some kind of a significant breakout, because it just can't do this forever, and the range is getting tighter and tighter as time goes on. So these two trend lines that you're looking at on the chart right now encase the currency pair and really represent the boundaries that I believe, once broken, will lead to a significant trend. And I think it's Maurice, or whatever, however this guy's name is spelled. Maurice, whoosh, wow, is talking about going sideways, and that's a really awesome market, and he's absolutely right. I totally agree with that. That it's kind of enjoyable when a currency pair just goes sideways for a long time, because it's more predictable and it can lead to some really great trades every time it goes to the top of the range and so forth. However, if the currency pair breaks below this trend line at 58.55 or 58.50, 58.40 on the daily chart, I think that we could see this currency pair fall a long, long way, especially if the currency pair gets all the way down past 5,700 even. If we break below that level, I think this currency pair could go down a significant way, maybe even 600, 700 points. On the other hand, if we break upwards and go above the green trend line up here and start shooting up towards the daily 800 simple moving average, then I think we'll finally have seen this currency pair start to make its way back to the 800 after quite some time. How long has it really been since this currency pair was at the 800? Chris, do you have a better number than I do on this one? Do you have a better reading on the 800 simple moving average? I'm not exactly sure on the daily how long this currency pair really has been, and I'd be interested to see what your numbers tell you on that. Pound dollar. And I'm going to load some more data right here and see if that pops it up. Maybe we'll get a better reading than even I have here on my chart, because I'm not sure that that reading is as long as it says it is. I don't think it's been away from the 800 as long as it says it is on my charts. Okay, so it's been a while for him too on the daily. Okay, so that's a lot of hours. That's a long time. Well, then it is legitimate, and it has been away from the 800 for a long time. And if that's the case for Chris and others, then the currency pair is definitely due on the daily chart for a move back to the 800 simple moving average and a cross above that green trend line, and a break and a close above that green trend line would lead me to believe that we're going to get all the way back up to the 800 simple moving average at 77.05. That's over 1,000 pips of movement upwards if that move really needs to occur. I had the feeling that this really had only been away from the 800 truly for about 500 bars. And if that was the case, then on the daily chart we still had room. MetaTrader just doesn't load enough data to give me an accurate reading until I go back in time and load data. Let's take a look and see if... Oh, okay, there we go. Chris mentions, yeah, we both had the same problem. It wasn't loading enough data, and it looks like it's only been away for approximately 440 bars on the daily chart. That would be fascinating, folks, because that means that the downward trend on this currency pair could easily continue without much interruption, and we wouldn't be getting into a significant problem if we decided that we wanted to do that. And we wouldn't be looking at, sort of a 1,000 candle reversal in the face if we shorted this pair. I'm sort of pro-dollar for the next couple months at least, continuing onward, and I wouldn't be surprised to see this currency pair fall a significant amount, Pete. I don't know if this is a long-term trade for you or if it's a short-term trade for you. If it's a short-term trade for you, then you've probably traded a lot size that doesn't really lend itself to holding on to the currency pair for a great deal of time. And it wouldn't really be practical for you to withstand a drawdown of 100 or 200 pips in the hopes or with the plan of getting 500 or 600 pips. However, if it's a really small trade size and you're trading really conservatively, then you're looking at a situation here where you could, practically speaking, you could hold on to a short trade, especially if it breaks below the blue trend line. And you could hold on to that trade all the way down for another 150 points. And then if it breaks lower below 5,700, you could hold on for another 200, 300, 400, or 500 points. And you could turn that into something really substantial. If that's your style of trading, most people that come to a webinar like this aren't long-term traders. Otherwise, they wouldn't really have any reason for being here because they're already in a trade and they're going to be in it for a very long period of time. All right. Currency pairs always go back to the 800 simple moving average, Blake. There is no experience and there is no situation where they don't go back to the 800, period. Ever. The only way that they could stop going back to the 800 simple moving average is if the world came to an end and the world was destroyed. That would be the only way it could happen. Because over time, it's just an average of itself. So it's not really going back to a level. It's just returning to its own average. And even if it goes sideways, eventually it goes back to the 800. Even if it goes down, eventually the 800 catches up with it. So, the only other thing that I would look at on the charts here, Pete, is the 4-hour chart really shows the range even more clearly. We just keep going up and down and back and forth over and over and over again. And the 4-hour chart really demonstrates that the 800 simple moving average represents the top on that currency pair. On the 1-hour chart, it is a little bit more interesting because the currency pair recently broke out of, Pete, this range right here. And I call this range a surprise box. It is a sideways movement that occurs near the 800 simple moving average. And it's a range that develops when the currency pair returns to the 800 simple moving average and then leads to a breakout from outside that range. And once that breakout occurs, a trend develops and can last for quite some time. I am primarily a counter trend trader. This is a method that I used in years past, very successfully as well, where simply the trade comes on the breakout from outside the surprise box, and then you hold that trend trade for as long as you can until it crosses beyond, some moving average, and in this case, the 62 exponential moving average is traditionally the moving average that's used. So that trade would be over. However, Pete, what's interesting is that I really think you're truly on the right side of the trade, at least for right now, and the currency pair is back below the 62 exponential moving average on my favorite time frame, the 1-hour chart. And that's a good sign, and so I wouldn't be surprised if we couldn't get back down to 58.60, which is a full 70 points lower than where we are right now. I don't know where your stop loss is, Pete, but I think that having a stop loss above the 60-67 range is appropriate. Now, if you can't withstand that type of a drawdown, Pete, because of the trade size, that's perfectly fine. And we could pick a stop loss that is something much closer than that. Say, for instance, a stop loss above the 62 exponential moving average on the 1 hour chart, which is at 59.88. I think that's totally practical and completely reasonable. And Pete, I thank you for your suggestion, and that was really super massive, excellent. Fuji, it's really always good to see you here. Paolo Rosetta, Paolo, sei italiano? And Paolo is considering a buy trade on the euro yen, he says. Portuguese. Okay. Well, I don't hablo or speak Portuguese. But that's way cool, Paolo. Do you live in Lisbon? Laughing out loud. I'd love to learn it. We should all learn today to say, let's trade currency in Portuguese. So, Paolo, while you tell me how to say that phrase, I'm going to look at the euro yen. We're going to bring that chart up, and we're going to do the same thing on the euro yen that we just did with the pound dollar. And we'll get rid of all these trend lines that are unnecessary. And let's see here. So Paolo needs to tell us how to say, let's trade currency. And I'll bring up my daily chart. Okay. Paolo didn't teach us how to say it. That's okay. That's fine. I'm still going to look at it. He was looking to short the currency pair. Thank you for clarifying that. I'm looking at the euro-yen daily chart. The daily chart is trending downwards as well, but it hasn't been away from the 800 simple moving average for an exceptional period of time. Just 419 bars. So the downward trend certainly seems to be in effect and certainly seems to be moving along quite nicely. I think if you've looked at these currency pairs lately, it does seem that downward is the way it's going. You can also see that on the daily chart that it's at the bottom of its range. The bottom of the range is 124.30 or so. And below that level, we don't have much to stop this pair from going quite some distance. However, we're 200 points higher than that right now, 250 points higher than that right now. So for a longer term trader, there really wouldn't be anything here that you're looking at in particular, except for if the currency pair breaks below that 124.30 level. Now, I'm not saying that our friend Paolo is a long-term trader. I'm just saying that he looked to short the currency pair, and that would be going with the trend. However, it's at the bottom of the range right now. So what Paolo's thinking is of selling the currency pair, but it's at the bottom of this daily range. And so maybe that isn't really necessarily the safest long-term trade, although there might be plenty of room for the currency pair to go down on the really short-term charts. But in the bigger picture, I'd wait to go short until it fell below 124. And I'd be thinking maybe this is due for a rebound back upwards because it's at the bottom of its range. If we look at the 4-hour chart, the currency pair has broken away from the 800 simple moving average, fallen, and is coming back up and touching the 62 exponential moving average on the 4-hour chart. Now, there's something special about it rising back up and touching the 62 exponential moving average. This will traditionally, in the midst of a breakout away from the 800, I don't want to do a retracement, I want to do a shape. This breakout away from the 800 right here is a surprise trade. I call it a surprise box because it breaks out of a box that looks like a little gift or a surprise inside of a box. It breaks out and starts to fall. Traditionally, the 62 exponential moving average will act as a barrier in the midst of that trend trade, so that when the currency pair crosses and closes above the 62 exponential moving average, then that trend trade is no longer really, practically speaking, in effect, and we could close that trend trade and move on to the next idea. We're just about to get to that point where the short trade is over and the trend trade is over, and maybe a counter trend trade back upwards makes more sense. Maybe. maybe that's a barrier, and that's something that we're going to have to look at and concentrate on and pay more attention to. This is the 1 hour euro yen. It doesn't really show me anything except for the 62 is coming up to meet the 200 simple moving average. Traditionally, in the Arizona rules that we've taught, the 62 below the 200 and the 200 below the 800 is a trending phase in the market. So now we've got three time frames, the daily, the 4 hour, and the 1 hour, that all show that this currency pair is still sort of in a short-term and a long-term trending market lower. However, this currency pair is starting to show signs that the 62 may cross up above the 200, and that could be the early warning sign that the trend is over and that we could be heading back up towards the 800 simple moving average, or at least just going sideways for the time being. What would give me an indication that a short trade is reasonable? A move to close below this trend line on the 1 hour chart and below the 62 exponential moving average. That would bring the 62 exponential moving average definitely back down below the 200 simple moving average. It would create some distance between those two moving averages. We're not at all oversold on the Boswellia. We've only been away from the 800 simple moving average on the 1 hour chart for 316 bars. That's not long enough. So there's plenty of room for this currency pair to go longer away from the 800 simple moving average. Let's check and see if there are any comments. Maurice says he's thinking of shorting at 126.80 if it comes back to it only for the short term. I love that. Love that. Okay, I think, Maurice, that's a really good idea. Okay, this is the 30-minute chart that has been away from, I think has been away from the 800 simple moving average now for quite some time. 644 bars. I think that's actually a fair reading and a correct reading. And that means that the currency pair is really maybe overdue for a trip back to the 800 unless this thing resets and I get a different reading. If it does not fall below this trend line, and instead of falling below the trend line, this currency pair rises up and closes above the red horizontal resistance line at 126.98, then I think the currency pair could be making its trip back upwards to the 800 simple moving average. And just like we've talked about, the other time frames, like the 4 hour, looks like it's ending that short trade, and the 1 hour looks like the trend could be coming to an end. If this currency pair goes above 127, we could see a move all the way 150 pips higher to 128.50, and that would make sense. That would fit with everything else that we've looked at so far. However, if it breaks below the trend line and starts to fall again, and the 62 exponential moving average on the 30-minute chart starts to go below the 200 simple moving average again, then we could see another 400 or 500 pips of movement until we start going back to the 800 simple moving average again. The 15-minute chart is right on top of the 800 simple moving average. That means, for me, that we're looking at a range on the currency pair, and this currency pair could break out of this range. It already looks like it broke out or tried to break out of this range right here to the top side, but then the currency pair went right back inside of that range. So we can now expand this range to something wider, and this is a surprise box on the 15-minute chart. That 15-minute chart surprise box means that if the currency pair breaks above or below and I just deleted it. Currency pair breaks above or below this range, it could be a breakout that leads to a trending move in either direction. Once again, the top of that surprise box is just about the same as the horizontal support resistance level. And so if it breaks out above, we could see a trade significantly higher. 128.50 would not be out of the question. However, if it breaks out of the box lower, we go below that level that we talked about earlier today, and we could see this currency pair fall as far as 124.28, which is the bottom of the whole range on the daily chart. Let's look at something even more interesting to me. Let's look at the 5-minute chart on this currency pair. It's been away from the 800 simple moving average for 576 bars. Doesn't seem like it's been that long, but it looks like it has. And the currency pair at this point would generally need to go away from the 800 simple moving average. Problem with that is 4 times in a row it got really close to it, and almost touched that level. And for some of you, this currency pair may have already touched the 800 simple moving average and would be free and clear to go upwards and away from the 800 simple moving average. All in all, it looks like the daily chart, the 4-hour chart, and the 1-hour chart were all trending. However, they were all sort of consolidating and getting closer together, and it looked like that trend could start to come to an end. So being short immediately doesn't seem as reasonable to me as waiting for those trend line breaks. And buying the currency pair above 127 seems awesome and totally reasonable, and a breakout which leads to a little bit of a counter trend trade or a relaxing of the short-term trade, the short trades that were put on over a long period of time. Okay, Paolo still needs to teach us how to say, let's trade Forex in Portuguese. So he could just write that phrase out so we can all say it together. Obrigado, he says. De nada, or however say you're welcome in Portuguese. Vamos fazer trades em Forex. Love it. I love it, Paolo. That's awesome. Oh, that's really good. Thank you. Obrigado. Thank you very much. All right, we have time for one more look at a currency pair. Let's look at something that we haven't looked at already and something that is not related to what we already looked at. Something different. Pound Aussie. I don't even know if I have that currency pair. I do. Okay. Here we go. Pound Aussie. I don't know why anybody trades this currency pair, but we're going to look at it. And it looks like it's just going to take a moment. It is totally obvious that this currency pair, all it has done is gone down. And we'll go start to finish on this currency pair and see what we find out. And I haven't loaded the 800 simple moving average on this pair because not enough data has loaded. This is the daily chart for the pound Aussie. As you can see, this currency pair has been in the midst of a massive 10,000 pip decline since 2008. And the currency pair is now trading at, it appears, I hope I got this right, 1.8024, and it is in the midst of a downward trend still. The 62 is below the 200, and those are both unquestionably below the 800. On the 4-hour chart, the currency pair has been away, and this is not accurate. This can't be accurate. I don't think it's been away for this long. We'll see for sure. Oh, it's been away for a while, though. This currency pair, if this is really true, this currency pair has been away from the 800 for a long time. And it looks like this currency pair is attempting to get back to the 800. If it has really been away from the 800 on the 4-hour chart for 1,025 bars, and I think that number's not that far off because the 800 simple moving average is well above the currency pair. We've got a couple things going on. We've got the currency pair above the 200, and we've got the 62 exponential moving average on this time frame above the 200. And that is an indication that the currency pair could be stretching upward and trying to reach the 800 simple moving average again, which is awesome. So keep that in mind. Above 8150, this currency pair is probably going to make its way all the way up to the 800 simple moving average. Let's look at the 1-hour chart and see what's going on. We haven't been away from the 800 simple moving average for very long. And on the 1-hour chart, folks, we are consolidating around the 800. That's a surprise box right there. That currency pair, if it breaks above that surprise box, is probably going to start, flying into space in a pretty significant trend. So on the pound Australian, I'd be interested in a buy trade above the top of that box, and a short trade, never. I wouldn't really be interested in a short trade right now. I wouldn't really know how to put that short trade on, and I'd be a little bit concerned about the currency pair trying to get back up to the 800 simple moving average. Yes, small moves are over 100 pips on this pair. Wow, that's amazing. It moves opposite to the Australian dollar, US dollar most times, so it's easy to trade. That's fascinating and totally interesting, and I absolutely love it. Thanks, Kurt. Appreciate the information there. That's awesome. Folks, it's been a pleasure to spend time with you this morning. Maud, thanks for letting me be a little bit late. We'll look at one more currency pair, and then we'll break until next week. New ID says, I'm new to this 800 simple moving average trade. I had a look at the 15-minute pound-dollar chart and noticed that it always trades 800 simple moving average once a week, if not. That is correct, New. That is absolutely correct. Let's look at one more currency pair. We'll pick something a little bit different. We'll look at the euro-pound. We'll take a look at a currency pair that we haven't looked at for a while. I think this currency pair has been away from the 800 simple moving average on the daily chart for over 1,000 candles. I think that's true. And we'll see if this can load more data down the line. But for now, the currency pair does need a trip back down to the 800 simple moving average on the daily chart. On the 4-hour chart, the currency pair started to break away from the 800. Do you notice that the currency pair consolidated around the 800 simple moving average and then broke out? This is a common theme with currency pairs lately. We have seen some breakouts and some initiating of a trend. But now the currency pair has gone back above the 62 exponential moving average, and we're faced with a dilemma. Is it really ready to go back all the way to the 800, or are we just in the beginning stages of a 4-hour trend? Well, we're going to know that if the currency pair goes below 8,700. If it goes below that level, I think we could see this currency pair easily get back down to the lows of 8,600, so 100 points lower, and then maybe go for a long, sweet trend ride. The 1-hour chart really isn't overextended on the Boston. It's only been 372 bars. So it's completely practical if this is the first fake move back up towards the 800 simple moving average. And instead of going back to the 800, the currency pair is simply playing around right now and is going to go lower all over again. How will we know that? Same way we would have known on the 4-hour. If it goes below 8,700, that's below the 200 simple moving average, probably cause the 62 exponential moving average to cross below the 200 simple moving average. That will resume the trending phase of the market for me. That's the Arizona rules, and that's the Phoenix phase, and that would be the resumption of a trend, and that would mean for me that this currency pair is due for a sweet long ride, even lower on this currency pair. This has been one of the best webinars I've been on, says Maurice, probably because I'm awake, slept all of London today, needs pips, and I need them too, and I need some sleep too, and it's been a joy to spend time with you. Can't wait to see you next week, everybody. Thanks for spending time together. Maud, Vicky, everyone at FX Street, thank you so much always. Really appreciate it. Don't forget, there are tons of excellent webinars in the premium version of FX Street. There are tons of webinars going on all the time. Don't forget to visit FX Street often, and we will see you in a week. Thanks to everybody.